Good afternoon, investors. Welcome to Qisda Corporation Investor Conference 2026, the first quarter results. This conference is chaired by Chairman Peter Chen, President Kelly Ke, CFO Jasmine Hong, co-chaired by GM of each business group, GM of Information Technology Business Group, Daniel Xue, GM of Commercial and Industrial Business Group, Lawrence Song, GM of Medical Business Group, Harry Yang, GM of Business Solutions Business Group, Joshua Zhen, GM of Networking and Communication Business Group, April Huang, and our CIO, Michael Wang. Today's conference is estimated to take 1 hour. Agenda is as follows. First, Jasmine, our CFO, will walk us through the company profile and the 2026 first quarter financial results. Next, Chairman Peter Chen and President Kelly Ke will bring us the business update and outlook, followed by GM of each business group to bring us a briefing. Next, we will enter the Q&A session. You may use the question box and submit your question. We will compile and answer them later at once. Before we commence, we would like to remind all participants to know the safe harbor notice in the report, as any forward-looking forecasts carry inherited risk. Please take a moment to read the safe harbor notice on slide 4. Thank you. We will now hand over to CFO Jasmine to present the 2026 first quarter financial result and business update. Good afternoon, investors. I am CFO Jasmine Hong. First, I will begin with a report on the first quarter financial result. As always, let us start with company profile. Qisda is a global technology group spanning the IT, medical, BSG, and NCG sectors. Our annual revenue scale is approximately over 200 billion. The first quarter revenue was 51.5 billion. Breakdown by area, Asia account for 50%, America 30%, Europe 18%. Our primary manufacturing bases are in Taiwan, China, and Vietnam. We have over 200 sales and service locations worldwide. Our main R&D centers are based in Taiwan and China. Total headcount across the group stands at 29,000 employees. In 2025, Qisda continues to receive numerous awards. Key recognition include, in the left-hand side, we won top 5% of TWSE-listed companies in Taiwan's corporate governance evaluation. 3-time recipient of AREA, 7-time recipient of HR Asia Best Companies to Work For Award, recipient of the Digital Transformation Award from HR Asia, and 6-time recipient of APSAA and TSAA. Our business group breakdown is as follows. IT revenue in the first quarter was 26.1 billion, representing 50% of group revenue. Medical revenue accounted for 15%, or 7.5 billion. Within medical, we operate across medical services, medical device, and hemodialysis. Medical services are divided into hospital, pharmaceutical retail channel, and management consulting. In hemodialysis, we offer streamlined end-to-end services from manufacturing and branding to distribution. BSG revenue was 10.1 billion, representing 20% of group revenue. The first time BSG has surpassed 10 billion in a single quarter. Within BSG, we focus on 3 areas: AI computing power, software and service, intelligence automation. NCG revenue was 5.3 billion, accounted for 10% of total revenue. We have enterprise and data center switch, wireless broadband networking, digital multimedia, professional system integration, and mission critical infrastructure. Others, primarily BenQ material, which cover functional film, mainly polarizer, vehicle battery separators, and has recently expanded into semiconductor materials. The purple blocks, they represent Qisda's high value-added business group. In the first quarter, these exceeded 50% of total revenue, surpassing the original IT business for the first time. Let's take a look at the first quarter consolidated statement of comprehensive income. The first quarter revenue was 51.5 billion. Gross margin was 16.7%. Operating income was 692 million. Net income after tax was 375 million. Profit attributable to Qisda was 318 million. EPS was 0.2 NTD. Compared to the first quarter 2025, revenue grew 1.79 billion YOY, but operating income declined 300 million. Regarding the non-operating income, there were FVTPL valuation impacts from some financial investment, causing a slight drag. Net income was 165 million lower than the first quarter last year, and EPS declined 0.05. Compared to the fourth quarter, although revenue declined 620 million, operating income decreased 80 million, up 13%. Net income increased 265 million. EPS increased 0.17 NTD. Regarding the YOY profit decline, the primary drivers were BenQ Material. In the first quarter last year was profitable, but from the third quarter and fourth quarter last year through the first quarter this year, BenQ Material has been loss-making. The swing is mainly attributable to weaker polarizer demand and price decline. The second reason is Qisda owned display business. Profitability was impacted by weakened demand for high-end display and crowding out effect as enterprises redirect investment toward AI resources, reducing IT business profitability. On the positive side, BSG delivered significant YOY profit growth. And second, NCG turned from a loss last year to profitable in the first quarter this year. So there were two negative factors and two positive ones. On QOQ, overall net income improved. The primary driver continued to be BSG. Both revenue and OP income grew substantially. Also, BenQ Materials, compared to the loss of the fourth quarter last year, it has reduced its losses, and NCG moved further in a positive direction. Despite headwinds from the display sectors, improvement in other business groups more than offset the impact. Overall, the first quarter showed a recovery from the fourth quarter profit trough. Let's take a look at the consolidated balance sheet. Total assets stand at 212.2 billion. The liability ratio is 72%, broadly in line with approximately 71% level at the end of December last year. Financial debt ratio is approximately 41%. The first quarter net asset value per share was 18.54 NTD. Our key financial ratios: account receivable turnover days decreased by approximately 2 days. Inventory turnover days increased by 6 days. The main reasons are, first, the ongoing tariff situation has lengthened shipping lead time due to the war between America and Iran. Early inventory preparation is required. And second, raw material price increases, particularly memory, require us to proactively build up adequate inventory. We have strategically increased both the dollar value and days of inventory to support future business development. Other metrics remain unchanged. This slide presents the financial trend covering revenue, gross margin, OP income margin, and OP income amount. Please refer to the slide for details. Business group revenue trend. The upper left represent our high value-added businesses. In the first quarter, the segment generated 26.6 billion in revenue, with 15% YOY growth, mainly driven by BSG. Medical revenue also grew modestly. right-hand side, BSG revenue surpassed 10 billion this quarter for the first time, reaching 10.1 billion. It grew steadily from more than 8 billion in the first quarter last year through more than 9 billion across the subsequent 3 quarters, crossing 10 billion in the first quarter 2026. Medical revenue was broadly flattish at more than 7 billion, up 0.3 billion slightly YOY. NCG revenue was 4.5 billion in the first quarter last year and 5.3 billion in the first quarter this year, representing 17% YOY growth. On the lower right, the original IT businesses saw revenue decline by about 1 billion. Net income is under pressure. A more detailed revenue breakdown by business group is shown on the following slide. Please refer to it for details. The slide covers Qisda Group companies listed on TWSE, Taipei Exchange, or Emerging Stock Board. In IT, Data Image and Simula both showed YOY net income growth. In medical, except for BenQ Medical Tech, whose net income declined, the other 3 subsidiaries remained profitable. In BSG, DFI saw consolidated revenue grow, though net income dropped slightly. In NCG, as mentioned earlier, both revenue and net income grew YOY, although a few subsidiaries saw declines. The consolidated picture shows growth. The bottom row is BenQ Material as discussed. This is the single largest factor dragging down group profitability YOY. Next, we will invite Chairman Peter Chen to share the second quarter of 2026 outlook. Good afternoon to all investors and media friends and everyone joining today. I am Peter Chen, Chairman of Qisda Corporation. Today, I would like to share 3 key points. The remaining time, I will hand over to our new appointed president, Kelly Ke Shufen, for more forward-looking presentations. First, from CFO Jasmine's report, you can see that we delivered 51.5 billion in the first quarter revenue, with revenue growth of approximately 4%. In terms of profitability compared to last year, EPS moved from 0.25 to 0.2, a broadly similar level, though not an ideal result. Looking at the historical data, the first quarter is typically our slack season, and second quarter and third quarter are the 2 quarters that most determine the full year profitability. Our current visibility for the second and the third quarter suggests both will clearly be better than the first quarter. We are cautiously optimistic that the second and the third quarter can support the year's overall profit structure. Followed by the second point. As I mentioned at the previous investor conference, last year represented our trough over the past 12 years, particularly in terms of profitability. Starting from this year, both revenue and net income should return to a more normal growth trajectory. Hopefully, with visible and meaningful improvement expected. And the third point, you have all noticed that since April in particular, Taiwan's stock market has been repeatedly hitting new highs, rising over 40,000 points. There are 2 main drivers, AI and semiconductors. As the CFO briefly mentioned, through our group companies, particularly BenQ Materials, which possesses significant expertise in chemistry and material engineering with many PhD level specialists. We are shifting our focus from our old focus, display-related tracks such as polarizers, battery separators, and etc. Shifting toward advanced semiconductor process required materials. So far, we have already made meaningful progress, and hopefully soon enough, we can announce breakthroughs in the close future. Our technical capabilities are strong, and we will not be absent from the semiconductor space. With STC, one of our subsidiaries, has long focused on critical semiconductor components. For example, components used in photolithography processes, and is already supplying key materials and components to existing semiconductor companies. These, along with AI, are the two main forces sustaining the stock market at elevated levels. I will not elaborate further on AI here. As I mentioned previously, we have invited President Kelly Ke, an expert in this area. I will hand over to Kelly to bring more details. We have absolute ambition and confidence in delivering clear AI-related achievements this year. For details, I will hand over to President Kelly Ke. This is my brief presentation to demonstrate the high-level points. Thank you. Thank you, Peter. Good afternoon to all investors and media friends. I am Kelly Ke, President of Qisda Group. It is my honor to share with you today that I joined Qisda Group exactly 2 months ago. As Peter mentioned, we are committed to driving AI across all of Qisda's products and solutions. I have had extensive discussions with the team and with Peter. And today, I'm pleased to share Qisda's business scope. Starting from the left, we want all of you to understand the 4 business categories of Qisda's. First, AI vision and display. For this category, it includes monitor and high-end displays, and also advanced vision, also satellite-related solutions. The second business category, we focus on AI infrastructure, especially focusing on AI data center infrastructure and also edge computing infrastructure. Adding that, we have IPC industrial computers and networking connectivity, NCG, and thermal management solutions. Within this infrastructure category, we have AI-related data center, edge, and networking. Those are included in AI infrastructure category. And the third business category is AI solutions and smart manufacturing. Within this category, it includes industrial automation, smart manufacturing, also smart retail. And also robotic-related solutions. As Peter and Jasmine mentioned, we also have semiconductor-related solutions within the group, providing either materials or chemical or semiconductor key process components. All of those fall into the AI solution and smart manufacturing category. And the fourth business category is the smart healthcare and wellness ecosystem, which include smart hospital and wellness ecosystem offering. It includes smart hospital. In BenQ Hospital, we implemented AI automation, and we also launched Senior Care Center. Other than that, we have some high-end medical devices and materials, and also dialysis, which include medical distribution, logistics. Other than that, we also put into consideration pet care related solutions. Let's recap Qisda business categories. First, which is AI vision and display. And the second category, AI infrastructure. The third category, AI solution and smart manufacturing. The fourth, smart hospital and wellness ecosystem. With the slide, it enabled investors and media friends to have better understanding about Qisda business categories. Let's look at the details within the four business categories. First, we have mentioned AI vision and display. We focus on high-end display. This is for investors and media friends. What is our mid to long-term focus within the business categories? What kind of solutions we are going to provide? In AI vision and display, we will focus more on high-end displays and sport projectors. We already have golf simulator projectors. And at Computex, we will announce our football projector. Third, we have high-end projectors, which include intelligence cockpit and medical displays, as well as kiosk self-service terminals seen in airports, hospital, and other venues. So Qisda also provide multiple solutions for high-end displays. Other than that, we also focus on drones, marine solutions, and robotic-related solutions. Last but not least, we also begin satellite-related display solutions and cube satellite-related solutions and rugged display for extreme environments and space applications. These solutions are categorized into the mid to long-term investments. Companies in this category include Qisda, BenQ Corporation, BenQ Material, Data Image, and Diva. Second, AI infrastructure. We have developed liquid cooling AI servers, which have already secured a significant order and are entering mass production. We have also developed 1.6T liquid cooling switches, which has been showcased last year as well. Additionally, we have UPS, industrial computer, and telecom networking. And importantly, we also offer CDU, cooling distribution units, which is a critical solution for AI infrastructure. Under Qisda Group, what kind of subsidiaries are involved in AI infrastructure, which include Qisda, DFI, AWIN, AI. The liquid cooling AI server was a collaborated development of Qisda and AWIN. And of course, Alpha Network developed 1.6T liquid cooling switch. This is also a collaborated result of the entire group and Alpha Network. For UPS, we have S-Pillar, provide UPS solutions. And third, AI solution and smart manufacturing. As you know that under our group, Meta Edge is a 3 cloud system integrator, Microsoft Azure, Amazon AWS, and Google Cloud GCP, providing digital transformation integration services to the enterprises. Meta Edge will continue to offer these services across all 3 cloud platforms. For enterprise demand. In industrial automation, smart manufacturing, and smart retail, and I would like to highlight that partner tech, Qisda, has enjoyed growth revenue-wise in delivering smart retail and will continue to invest in this area. AcePillar and Transpac are also making good progress in smart manufacturing. Last, for robotic and semiconductor-related solutions, we have Simula, provide semiconductor-related solutions. Together with BenQ Material and STC, also offer semiconductor key process components, materials, and related solutions. Lastly, smart hospital and wellness ecosystem. We have smart hospital and senior care and precision medicine. We also have hemodialysis. And beyond human applications, we are starting to penetrate PET market, PET hemodialysis, to make it more delicate. For wellness care and pet care related, which is a blooming market. So either Qisda itself, BenQ Hospital, BenQ Corporation, BenQ Medical Tech, BenQ Material, Noble Baby, and New Best Hearing and Concord Med are all bringing solutions to smart healthcare and wellness ecosystem. So these are the business category focus to our mid to long-term strategy. Follow up, I will have each business group to share, starting from the second quarter to the fourth quarter this year, what is the business group focuses and solutions to share with investors and media friends. First, let's invite GM of ITG, Daniel Shi. Good afternoon, I'm Daniel Shi, responsible for the ITG. Qisda has long been a provider of top-tier design and manufacturing services for high-end displays. Beyond our existing high-end product lines, in recent years we have been actively expanding into high-speed signal interconnect display to support edge computing systems, application, and peripheral connectivity expansion by leveraging various high-speed signal interface standard and transmission technologies. We're transforming displays into hubs for data transfer and power distribution, enabling future support for local AI and edge computing devices. We have consistently emphasized building a resilient supply chain through multi-site manufacturing in China, Vietnam, and Taiwan. Our results speak for themselves. Our Vietnam facility surpasses 700,000 units per month in display production in the fourth quarter last year, and in the first quarter this year further surpassed 800,000 units per month. Not only Qisda itself, Our group company are also leveraging our Vietnam factory infrastructure with data image scheduled to complete trial production at Qisda's Vietnam site in the second quarter this year. That concludes my report. Thank you. Thank you, Daniel. Next, let's have GM of CIG, Lawrence Song. Good afternoon to all investors and media friends. I am Lawrence Song, GM of CIG. Our business group will pursue 4 strategic directions. First, advanced vision. Second, innovation solution and edge AI. Third, intelligent solution machine with a mind, which is physical AI. And the fourth, high barrier services. First, advanced vision, building on Qisda's strength in large format and high-end displays, as well as optics and ultrasound, and deepen our presence across multiple markets. Second, innovation solutions, edge AI. We will focus on embedding computing power, CPU, GPU into new products to substantially expand the AI computing capacity required for our customers' AI application. Third, physical AI, focusing on distributed AI intelligence to be embedded into products such as robots, robotic lawnmowers, drone, and autonomous vehicles, all devices that require onboard AI capabilities. Meanwhile, we will also begin investing in products and technologies aligned with the group's broader data center solutions direction. Lastly, based on our very good base on high barrier services, continuing to expand our market share and product depth in our existing high barrier service businesses, including medical CDMO business and automotive applications. We will expand into software-defined vehicle and intelligence cockpit products and services. Thank you. Next, let's welcome GM of BSG, Joshua Zhen. Good afternoon to all investors and media friends. I am Joshua Zhen, GM of Qisda's BSG. Our core strategy is to focus on the development of AI computing power, software services, and automation as our core businesses, while providing advanced intelligence solutions to support clients' digital transformation and AI implementation. As the AI wave accelerates enterprise demand for digital transformation and the computing power requirement for it, we will more aggressively expand our computing power businesses. We will combine our business group's key capabilities and talent in thermal management and energy efficiency to enter the AI infrastructure business opportunity, integrating AI server and thermal management technical service capabilities to provide small batch, high mix intelligence solutions to enterprise customers. Our overall AI solutions include product leveraging DP100 DLC technology for reducing carbon footprints and lower energy consumptions, such as CDU. In AI product planning, we adopt an end-to-end integration approach, developing service-oriented product, supporting both model training and inference. Our product design emphasizes a modular architecture to enhance flexibility for customer deployment. We will offer products compliant with standards such as OCP and other specifications. The product and services we have developed can support large AI model and high-performance computing via technologies such as CXL and PCLE. These product highlights will further strengthen our BSG's development in the AI computing power businesses. These products and solutions will also be applied across the business area outlined by our president, including AI infrastructure, AI solutions, and smart manufacturing, covering liquid cooling AI servers, AI data center infrastructure, and smart manufacturing, and AI applications for enterprise digital transformation. Our business group will also collaborate with group companies to generate synergies in the AI domain. That concludes my report. Thank you, Joshua. Next, let's have GM of NCG, April Huang. Good afternoon to all media friends and investors. I am April Huang, GM of NCG. First, Regarding the NCG's first quarter performance, demand gradually improved, resulting in 17% growth versus the same period last year. For the second quarter, we have mentioned LBR product for India was slightly delayed due to the national standard finalization timing, which has had a modest impact. We expect this to shift to the second half of this year. Next, I will briefly outline NCG's positioning in the AI era. NCG's role is to become the high-efficiency express courier of the AI era. The vast computing power generated within data centers needs to be transmitted out, as we are the courier of that computing power. Our mission is therefore to provide complete and high-speed and stable networking infrastructure. That is our positioning. In terms of core product development, this year, we focus on AI infrastructure. In switches, we already have 400G and 800G products and are actively developing our 1.6T platform. Meanwhile, we also integrated liquid cooling systems. For LPO, our 80-100G are ready for LPO options, laying the groundwork for future CPO adoption, all in response to the demands of large-scale AI data centers. In wireless, Wi-Fi 7 has entered mass production. Wi-Fi 8 is currently in development. We continue to deepen our 5G and 5G RU and FWA deployment. We also mentioned that LBR product is expected to enter high volume shipment in the second half of this year. Beyond hardware, our software solutions, we also provide solutions based on SONiC as the core architect for switches, combined with multiple network OS software options to provide customers with more complete and open network solutions. That concludes my report. Thank you. Thank you, April. Next, let's have GM of Medical Business Group, Harry Yang. Good afternoon to all media friends and investors. I am Harry Yang, GM of Medical Business Group. Let me report on the Medical Business Group's the first quarter performance and future layout. Overall, in the first quarter, the Medical Business Group grew 5%. In medical devices grew approximately 12%. Our medical business is structured around 4 strategic areas. First, medical services. Second, medical and health retail channels. Third, aging medical equipment. And fourth, dialysis. For the first part, medical services focus on hospitals. We will continue to strengthen our specialty expertise and deepen the integration of medical care and nursing home care. Second, medical retail channels, including our drugstores, hearing aid retail channels, and health retail stores. We have approximately 60 health retail locations across Taiwan. Our current and future strategy involves 2 tracks. First, internal integration. For example, our hearing aid stores have begun offering health food products. We are integrating internal resources comprehensively. Other than that, we're also developing to collaborate with external partners. For example, how can we expand our scope and develop synergy? We start to work with external pharmacy chains to conduct centralized procurement and group procurement, combined with integrated logistics with the goal of minimizing costs. Internal integration and also external strategic partnership. The third part aging medical equipment. Beyond our existing high-end medical devices portfolio, we're also accelerating the deployment of high-end CDMO medical devices and hoping to muscle into overseas markets. And for aging market, we developed the first device in Taiwan, IQMR, Intelligence Quality Medical Rehabilitation, an AI-driven intelligence rehabilitation system. It integrates AI patient apps and AI precise posture assessment and AI-generated prescription guidance and AI-powered intelligence training protocols. This system will support our broader senior care market strategy and represent a significant breakthrough in the aging market. This is the third part. Lastly, dialysis. We continue to execute our plan, targeting a top 3 position in China. Beyond actively distributing in China, we have achieved strong results in overseas markets such as South Korea and Southeast Asia countries, including Thailand. We have also recently launched many new products, including water filtering products and PET dialysis solutions, as mentioned by our president. The 4 strategic areas are also include one more emerging focus. Given the trend of declining birth rate, the senior care market and pet market are both growing rapidly. Through our subsidiary, Concord Med, we have invested in a company specializing in pet pharmaceuticals. We have also introduced dedicated pet counters in our pharmacies. This segment will become increasingly significant. The second quarter outlook for medical will continue to be positive and progressively growth seen in the first quarter. Thank you. Good afternoon again to all investors and media friends. I'm Kelly Ke, President of Qisda. I will now share our cross-business group focuses from the second quarter through the fourth quarter this year, corresponding to our four business categories. The first category, AI vision and display. We will focus on first, high-end displays. This slide is the short-term focus. Secondly, we will continue development of sport projectors and advanced vision, smart cockpits, drone, and robotic-related solutions. Category 2, AI infrastructure. The most important deliverables this year are our liquid cooling AI servers and our 1.6T liquid cooling switches. Category 3, AI solutions and smart manufacturing. Meta Edge will continue to provide cloud-to-edge enterprise solutions, and we will expand our smart manufacturing businesses driven by Ace Pillar and the subsidiary of Ace Pillar, Transpac Equipment. We will also expand partner Tech's smart retail businesses. And the fourth category, smart healthcare and wellness ecosystem. As Harry mentioned, we will continue to optimize our retail channels and hemodialysis business, expanding our pet care focus and increasing our physical stores toward the senior care and pet markets. Finally, since joining Qisda, I have initiated 3 operational efficiency initiatives. First, tightening AR overdue management across the group. Secondly, to control the OPEX to reduce the cost. Both Peter and I are actively managing OPEX control across all business groups for managing this aspect. The third part is manufacturing efficiency. As we scale up production in Vietnam, we are introducing greater automation to lower costs. We are also implementing a performance improvement plan to drive higher performance standards across our people. These are the operational focus areas I have introduced with my team in my first 2 months, along with a mid to long-term development roadmap. Finally, I would like to share that Qisda will participate in Computex 2026. BenQ Qisda Group will exhibit from June 2nd to June 5th at Nangang Exhibition Center, Hall 1, 4th floor. You will see our BenQ and Qisda booth immediately upon entering. We warmly welcome all investors and media friends to visit our Computex booth and share your feedbacks and guidance. Thank you. The above is the first quarter of 2026 Qisda Group Investor Conference. Now we will enter Q&A session. You may use the question box to submit your questions. Due to limited time, we will compile them and answer them all at once. Good afternoon to all investors and media friends. I am Peter Chen. We are now entering Q&A session. Several questions have come in, and I will address them in turn. First, regarding our overall net income margin estimate for this year, please understand that we are unable to provide a specific forward-looking number at the investor conference. This is a regulatory requirement. However, I have consistently emphasized that last year was our net income trough. Over the past 12 years, we have not posted a loss in any of the past 12 years, and we have generated cumulative profits of over 50 billion over the period. Last year was the lowest point. As I mentioned, this year, the first quarter EPS was 0.2 NTD, is not ideal, but the second and third and fourth quarter will all show clear improvement relative to last year. I cannot give you a specific number, but second quarter results will be out very soon. It is already May, and you will see the growth we have been talking about. Please be reassured. We also recognize that we need to demonstrate results in our profitability quickly to reward our stakeholders. Hopefully, I ask for a little patience because over the past 12 years, through very difficult conditions, with the support of our shareholders, we have not posted a loss. We are not good enough. Of course, there is more to improve, but the determination is there. You want me to point out the owner of the poor profitability. I just want to say that there are up and downs in managing and operating the corporation. We have been emphasizing that we need to make a quick turnaround from any trough in the past 12 years. We have made a very significant structural adjustment to our business model. Why do we keep talking about transformation? We have shifted from a model focused mainly on display adjacent peripherals toward a system-oriented model. That is not easy. Through M&A and our Grand Fleet strategy, our product portfolio is no longer centered only on displays. We now have medicals, probably Taiwan's deepest and broadest medical investment. We have also mentioned that BSG, what the market calls AIoT, which is posting excellent results this year. Other than that, we have network infrastructure, which includes 5G, 6G, Wi-Fi 6, and Wi-Fi 7, and so forth. With all these new business territories built through M&A and consolidation, profitability ultimately has to shine through in growth margin. When I returned in 2014, growth margin was around 10%. And currently, it is at around 16 to 17%, with recent quarters reaching more than 17%. Growth margin is the prerequisites for any further improvement, whether increasing revenue or reducing costs. OPEX control can only create profit flow, though if growth margin is adequate. That is why transformation is necessary, gradually shifting from peripherals to system, and now even to AI. Throughout this 10 plus years transformation, we have not posted a loss, and we have been continuously finding a way to move forward. I ask our shareholders and investors for patience. Let me share some data. When I returned in 2013, revenue was 119.2 billion. By 2022, it was 239.8 billion, growth of over 120 billion in 11 years. The progress has been substantial, and we really anticipate affirmation from you. During the 3 COVID years, revenue was 169.8 billion before the pandemic in 2019 and 239.8 billion in 2022, a 70 billion increase in just 3 years. Have we not been changing and transforming? The numbers speak for themselves. We understand shareholders' expectations are high, and we appreciate that we still have more to do. We see bottlenecks in our organization, and we are committed to breaking through the bottlenecks responsibly to return to the spotlight. You can see that our investor conference participants have changed. We have brought in an exceptional new president with a strong AI background, President Kelly Ke. This is a statement of intent. She presented her plan today with great AI background. And we are pushing aggressively into AI. Such a major change and reinforcement effort is our commitment to deliver results. That's why we make such changes. Similarly, the Commercial and Industrial Business Group now has a new GM, with Lawrence Song on board, which is also reflecting the urgency of rapid and effective organizational and product adjustments. Within just 2 consecutive investor conferences, you have already seen significant organizational strengthening. Going forward, if any business group continue to underperform, we will make further adjustments. We will not hesitate. We ask for your continued support and a little more time. For those bottlenecks and issues, through organizational strengthening and track adjustments with AI implementation that we have performed in the past, we were less involved in AI computing power because it was not our strength. But now we are investing in it too. as described in the President's report and in GM of BSG Joshua Zinn's reports. Our investment in AI server, thermal management, for server racks, and so forth, will be showcased at Computex from June 2nd to June 5th. The speed of our progress has been very fast. We hope to show some results before the end of this year, with increasingly meaningful contributions next year. All of these adjustments are moving quickly. We expect the second quarter, the third quarter, all the way to the fourth quarter to demonstrate a fundamentally different profit capability and profile compared to 2025. I hope our investors will continue to support us and guide us. Regarding the second question, the business group growth ranking for the second quarter, the third quarter, and second half and full year. Roughly, BSG will likely to be the fastest grower this year. The first quarter growth was approximately more than 20%. The second place would be Medical Business Group. The third place would be NCG, coming from the 12th last year. NCG will return to a growth trajectory, even if not spectacular. Last would be our traditional IT business group, such as projectors and displays. Those are approximate rankings for our 4 business groups. With all questions addressed, let me close this conference. I sincerely thank all investors and media friends for joining in our investor conference. We expect each quarter to be better than the last, and we will work hard to deliver results to reward your continued support. Thank you very much. All online questions have been consolidated and addressed. Today's investor conference is now concluded. Thank you for joining Qisda Corporation 2026, the first quarter online investor conference. We are closing today's conference. The audio and video recording will be uploaded after the call. Thank you for your participation. You may disconnect now.